Hello and welcome to Property Investment Blueprint Podcast. In today's podcast, I'm here with Adrian Benjamin, founder of Adrian B Finance. Adrian helps property investors and professionals protect their family and wealth through insurance. And Adrian is also a wealth protection advisor. I love your tenacity, energy, and mission you've embarked on, and Adrian. I am honored to be your host on the Property Investment Blueprint Podcast. Welcome to Property Investment Blueprint Podcast, Adrian.
Thank you for having me. That's quite an introduction. So yeah, thank you for that.
You're welcome. You're welcome. Thank you for being here, Adrian. I really appreciate you being here. Thank you. I know it's very nice that you're doing what you're doing right now. The reason why we have you on, because I believe the services that you offer, and lots of people can kind of relate to it, and lots of people need to learn about it to see whether there's an opportunity out there that they could protect. Okay. But before we get to there, the story isn't good unless people know where you came from, how you started. Tell our audience how you started and scale your insurance business to where it is right now.
Okay, so I'm originally from Manchester. I know the accent's probably not as strong as it used to be. Went to Birmingham to do business studies at university. And then when I graduated, I did investment banking in America for a Swiss bank in 2009. So again, kind of the height of the last property crisis. And then throughout my career, I've had jobs all throughout different banks, such as HSBC. And then I did financial consulting for Deloitte, Visa, Bloomberg, and a host of other companies. But it was while I was consulting that I've always wanted to get into property anyway and to build a portfolio. And I think, 2020, so when COVID hit, I was like, okay, I've done everything I needed to do in the bank and consulting. Let me spend more time on property. And I'd done deal sourcing, masterminds. I'd done service accommodation, rent to rent. So I was like, let me just do this now full time and just jump, because it's COVID. We don't know what's going on. If I don't try now, I'm never going to do it. So when I was deal sourcing and getting investors from all different backgrounds and all around the world, the same thing they kept on saying is they're doing the properties to obviously the rental income and then the capital appreciation. But the main theme was to pass it on to the next generation and the family. And the more and more I kept on hearing this, I was just thinking, how do you actually do that? And none of my clients knew how to do that. So I thought as well, let me understand more about property by getting my mortgage qualification. So I studied for that. And then there was one module on insurance, which really stood out to me. That was like I said before, the epiphany moment of, if anything happens to you, how are you supposed to pass all these things on? And then I learned about the importance of not just life insurance, but, protecting your income as well. So that's when I thought I'm definitely going to specialize in this, because a lot of the people watching this are property investors, and you spend so much money saving for the deposit, solicitor fees, all these fees. And then if something could happen to you and the properties aren't maintained, let's say, or the tenants move out or whatever reason, there's a crash, all that energy and effort, and more importantly, money is wasted. But by having the correct insurances in place, even if the worst was to happen, you can still pass everything on to the family in the right way. So that's where I really taken my career in that. And again, because I've got, interest in property, I understand what property investors are trying to do. I understand all the strategies. It's more planning it and the financial planning. It's not just the insurances. It's more of, okay, you've got the policy. Have you spoken to your family about it?
Yeah.
Because I don't want my clients spending money every month, doesn't matter how much it is, and you haven't had the conversation, because it's just a waste of money. It's planning, your partner, your kids, for if the worst should happen, you have a plan of what to do.
Yeah.
So you could say, for example, pay all the mortgages off. You could say pay some of them off. You could say pay none of them off and buy more. It doesn't matter. Each individual is different, but at least if you've got that plan and you're helping them with that. So a lot of property investors are doing it for their children, which is fine. But I'm saying get your kids involved in property as young as possible, even if it's doing viewings, whatever, because you're trying to pass everything on to them. And if they have no education, you haven't guided them, it's kind of pointless. I understand how hard it is to get one property, never mind a portfolio, and you don't want to get stuck in that. And also, point two, you don't want the tax man to be taking a lot of it as well. So with me, I make sure all the life insurance policies are put into trust, so they're not paying 40% inheritance tax. And again, it's people aren't aware of these things, because even my time in the bank and consulting, I didn't know anything about these products. So that's why I'm very passionate about. It doesn't matter what background you're on or how much money you earn. This is different. And again, they don't teach us these things in school.
No.
And even if you've got policies with your employer, do you understand what they are? Does it match your need? Because I've got some clients where their employer will give them life insurance, but because they got the portfolio, it's not enough to cover everything.
Yeah. Wow. Thanks for sharing that with us. You sharing that is just like sprinkling so many light bulbs to understand how important it is. Your enthusiasm, energy is what draws me to you. I've been watching in social media, I've seen your videos, educating people. But what really keeps you going with the insurance industry? Because it's one of the things where not everybody thinks about it. So how are you able to kind of motivate yourself to actually keep it going whilst looking after your family and things like that?
That's a good question. So I feel insurance, it doesn't have the greatest of reputation, which I can understand. But again, I'm passionate to try and change that. Because I've come from a banking and consulting background, it's using those skills that I've learned to help normal everyday people. And a lot of the projects I've worked on with regards to risk. So when I was doing investment banking in 2009, that was a massive crash and a lot of people getting laid off. And then coming back to London and working in Canary Wharf for HSBC to create a brand new bank to fix that, it's all around risk. There's risk in everything. And, everyone's trying to make as much money as possible. But again, the risk bit. So when you get a mortgage, right, let's say I'm a lender and I give you a mortgage, my insurance on you is the actual property, because until you pay all the interest off, I still technically own it. So if you've got all these corporates and lenders, they think insurance first, profit second, but everyone else is profit first, profit, and they're not protecting it, and also from a tax perspective as well. So like I touched on before, if you put the life insurance policy into trust, you're not paying any inheritance tax.
Yeah.
Whereas if you don't, again, you're giving, 40% is quite a lot of money depending on what your banding is. You're giving it away when you don't have to. But again, that's due to awareness. And like I said before, when I came into insurance, I didn't know anything about these things. I had my life insurance policy. I had all the critical illness, private medical. No one told me about a trust and how simple it is and why we all need it. No one told me that. So to answer your question, that's why I'm trying to, spread the awareness as much as possible, because everyone needs it. Doesn't matter how much you earn or where you're from. Unfortunately, that day is going to happen where someone passes, and you want to make sure your family is equipped to handle that, and you're not losing anything. You're not losing, your property or the income that you're giving your family. That isn't lost either as well. So that's why I feel it's really important.
Fantastic. Thanks very much for that. So thanks for sharing that with us. So I just want to walk back a little bit now, because we may want to understand. So insurance, when you talk about insurance, there's so many type of insurances, right? We've got car insurance, we've got life insurance, we've got building insurance, you name it. There's so many insurance, content insurance, everything is out there. So I'd like us to look back a little bit. If you can tell us what insurance is, right? What sort of insurance type do you deal with, right? And what sort of people may this insurance go back on? But let's start from the basic, right? What is insurance, right? And what do people need to know about the policies?
Okay, so the main ones that I specialize in, the four are private medical. Is really important to me, because if you're ill or sick, you need to get seen as quickly as possible. So it's speed. And as we all know, NHS is, under a lot of stress at the minute. Again, people are striking. You need to get seen as quickly as possible. So 2 weeks ago, I had an issue with my chest. I've got private medical, so I had a video consultation with a doctor, and then they said you need to see someone physically because she can't fully diagnose me. I saw someone on a Friday, I think 4:30 in London, went to see someone privately, got examined, and then they referred me to another private hospital where I had a chest x-ray and I had bloods, which, it's expensive and also it's time consuming. but I got everything done on the same day. If
Wow.
I'd gone through, the reason why I obviously had to go private, I couldn't get hold of my doctor. I've never seen my doctor, and I'm always waiting. They keep referring you 111. They can't do anything. They're not doctors. They can't prescribe you prescriptions. So it's just a waste of time. But my point is, I saw 3 doctors on the same day on a Friday.
Wow. So
That
private
you're,
medical.
yeah, it's basically speed. So I'm not,
Okay.
my family work in the NHS. I have nothing negative to say about the NHS, but if you have the ability and you can afford to go private, you're helping someone that can't afford private because you're freeing up the
Yeah.
space. And I
Mm-hmm.
think that's what people need to know. And it's more affordable than people think, but it's literally a life and death situation. So if you go and have surgery, which I've had previously on my eye, those surgeries can cost tens of thousands. But because you go through NHS, you don't realize how much all these things cost: bloods,
Yeah.
X-rays, prescriptions, seeing a
Mm-hmm.
specialist. It comes to hundreds of thousands of pounds. So for me, the basics of all insurance, like private medical, is your health. If you're not healthy, you can't work, you can't generate an income. So I'm always going to put private medical first. Second, I'd put income protection.
Yeah.
So our majority of us, I get, some people might have passive income from portfolios, but you've got it takes a while to get there. Your ability
Mm-hmm.
to work and get and gain an income for yourself, for your family, is your biggest asset. If you can't work, everything stops. So even if you have a portfolio, you still need to sign everything off, and you're still liable for everything. So worst case scenario, you get hit by a bus, you're not going to die, but you're in and out of consciousness, and let's say you're in hospital for 6 months, your bills aren't going to stop. And even if you have an employer, your sick pay is going to stop at some point also. And then if you have statutory sick pay, that's £96 a week for 26 weeks, right? It's not
Wow.
it's not a lot. So
Mm-hmm.
protecting your income first, where again, let's say you come out of the hospital after 6 months, and they say you can never work again. It doesn't matter what your profession, and that's huge. So what income protection does is you can say, look, I'm going to protect my income as of now. Doesn't matter what I'm on until my retirement age. So you're guaranteeing an income no matter what happens and what capacity you're in. So I feel that's really important.
Yeah.
Critical illness cover. So if something serious like cancer, heart attack, and stroke, one
Mm-hmm.
out of 2 of us in the UK, unfortunately, is going to get cancer. That puts a massive strain on yourself, your family, and your finances. So if you're going through something serious, the last thing you want to do is work, right? A lot of
Mm-hmm.
people, especially when you say type people, self-employed people, I specialize and work with them as well. Everything is you're responsible for absolutely everything,
Yeah.
and you need to rest and get treatment instead of working. So critical illness will basically give you a tax-free lump sum. So Rahim, you could say, look, if I get really ill, I don't want to work for 2 3 years. So we'll just say, okay, whatever your salary is or what your income is for a year, we'll times that by 2 or 3. So if the worst could happen, you don't have to stress about, again, money. That's the main thing. And the final one, life insurance. If you were to pass away or a family member to pass away, you've got a tax-free lump sum, which your family can do what they want with. So again, it could be paying down a mortgage, it could be getting more mortgages. You have options basically, and it doesn't matter how much you earn. Even if you're not working, you're still an asset to the family in some capacity. So sometimes I've got couples where someone earns a lot of money and they just say, "Oh, I'll be fine," but you won't, because emotionally, it doesn't matter how much you earn, you need time off. I'm
Mm.
self-employed. I couldn't take time off because I had to earn income, but you're still dealing with stress and trauma. That's
Yeah.
not great. So all these different insurances are there to actually protect you and make sure, one, the money's protected, and two, if you need, like, mental health is a big thing we talk about now. If you need time away, like, you are able to do that.
Wow. Wow. They are all important. Private, I love. Income protection, I love. Critical illness is I love. Life insurance, literally, it's amazing. To be honest with you, this hasn't brought to me until I would say a couple of years ago. Right.
Mhm.
And I was speaking to my then mortgage broker. I said, have you got insurance? I was like, what do you mean insurance? And then he explained all this stuff to me. I was like, what? Why do I need it? And then he explained all that. So I understand it makes perfect sense. So if anyone listening and not thinking about it, I think it's about time to kind of look into stuff like this and see what advantages you can take. Because relating to critical illness, yesterday I was in hospital visiting a friend of mine. I saw him less than 2 months ago. He's one of my landlords, and I rang one of my friends and he told me, do you know what? That guy is in the hospital. I said, why? I saw him less than 2 weeks ago. He's got cancer. He's got cancer, the liver. He's got cancer on the bones, blood. Literally, he's in his final days. Less
Oh,
than 2 months, right? And now, before he went to coma, they asked him if he's got life insurance. Sadly, he hasn't got it. And now having this podcast a day after, I can see how important it is because for him to see the doctors took him 2 months. Right. By the time he saw a doctor, it's too late. They can't do anything anymore. So I can see that private medical thing, that speed. Speed is in the essence when it comes to health. And I totally relate to that. And I think it makes sense. I was emotional yesterday. I'm just kind of just funny that we're having this podcast today. So thanks for sharing that with me. Thanks for sharing that with the audience as well. And you did touch on trust. Most people don't understand what trust is in the first place, and what is the need to have it, and what are the benefits for having a trust. So if you can tell us what trust is, what the benefit, and why people need it.
okay, so a trust is basically instructions. I'm going to stick with just life insurance because they're different forms of trust. Okay.
Okay.
So let's say you have life insurance for your family. The trust is basically saying the trustees are people that you trust. So example, your wife, your brother, your sister, your trustees, beneficiaries, let's say your small children, right? And also your partner and brothers and sisters. It prevents, when someone passes away, people can say, I'm entitled to this, I'm entitled to that. If your name isn't on the trust, then you're technically not entitled to any of the money. And it's also about control. So let's say you've got a policy for, I don't know, £300,000 of life insurance. Would you really want 18-year-old kids with £300,000? Or would you want someone, a guardian, someone you trust above them to give the money in the correct way?
Yeah.
Right. That's what it's for. It's to say who's entitled to what and what role you have. So again, default for me, all my clients, your partner is a trustee, the kids are beneficiaries. And then add someone else on as well, a brother or sister, again, someone you trust. So if people watch Power, then yeah, there's an episode about a trust when he passes away, and there's issues with that. And then there's a show on ITVX at the minute called Riches, which is about a wealthy British African family in the UK, and they've got millions, and they're trying to sort out the trust basically in the life insurance. So it's even though it's TV, these things happen all the time.
Yeah.
And like I said, if your name's not on the trust, you're not getting in, basically. And then you can stipulate, again, you can have a letter of wishes, which is separate, which isn't a legally binding document. You can say, look, the children can only get the money when they turn 30, 35, for example, right? Because you're a beneficiary, even if you're 35, you can't get access to that money. You're not a trustee. So it's controlling it. So let's say, for example, people that win the lottery, majority of them go back to exactly how they were, like, was it 5 to 6 years afterwards? They've blown all the money because there's no structure and control on it. And also, if you're not good with money, it's not going to help. And again, we've got, athletes, footballers, they all make millions. And then when they're 50, they haven't got anything. They got anything to show for it. So with this, you can strategically say, look, I want to give you X amount to do X, Y, Z, or pay these properties off or buy more properties. Again, it's family planning. So that's why I don't even really use the word insurance, because people have, negative connotations with that word. But this is legitimate family planning, and that's how generational wealth is passed on. It can't happen without a plan, communication, life insurance, wills, and trust. Like, those are fundamental things. If you don't have all of those things, it's not going to get passed on, because HMRC are going to take a lot of it on death, which people don't realize.
Absolutely. So basically, a trust is not a component, it's not a corporation, because most people think it's a component or a corporations or things like that. Okay. So you've touched onto the investor side of things a little bit. So let's now look at the people that are not property investors probably, or they're looking to start their property investment journey. Let's look at for ordinary people that are working on a day-to-day business. So why would I, who's earning maybe £20,000 a year, would take a life insurance or an insurance that have medical, income protection, critical illness, and then obviously life protection? So why would I need it?
Everyone needs it, because again, your health is wealth, right? I know it's a bit cliche. If you don't have that, you can't work. Employed, self-employed, entrepreneur, doesn't matter. If you're not healthy, you can't really earn an income. And again, even if you do have passive income, you're still liable for all of those things anyway. So again, with that analogy of you being in hospital for 6 months, you're not going to die, you're fine. Bills don't stop. The lenders are still going to want their mortgages paid. And again, if you don't, this is why I don't like auctions. Something negative has happened, as someone passed away, someone that can't afford to pay the mortgage. So all that time, energy, and money you spent, deposit, solicitors, all these things, and the lenders took it back off you and selling it to the highest bidder. Like, you can prevent that. These things prevent that happening. So especially if you're a property person, even if it's residential, your own house, you don't want your family to lose that if you're not here for whatever reason, or you're critically ill and you can't work. Yeah, you're still liable for that mortgage. So then, like I said, lenders protect themselves first, because if you don't pay it, they'll take it off and they'll just sell it to someone else. So how come it's okay for the corporates to do it? It's fine, and we all just go ahead and we'll get mortgage and we all do it. When it comes to ourselves, we question it. Because you know the power of property. If you've got one property, for example, let's say you want to pay off, someone passed away, it's passed off, and they, I don't know, convert the house to an HMO, or they do SA or whatever, and it generates $5,000 a month, and there's no mortgage on it. Like, how that impacts the family in a massive way, and that extra income, the family can diversify, buy more properties, or do something completely separate. Or say, you know what, we're going to travel the world for a year. I mean, you can do it, and that's from the power of one property.
Right. I can see where you're coming from. I can clearly see that. And so basically what we are trying to say here, basically, regardless what your financial situation is, we need insurance. We need life insurance to protect ourselves, our income, and our family. So looking at the costs, some people may be thinking, whoa, life insurance, income protection, critical illness, life cover. That must cost a fortune. I know we don't have a specific prices for it because it's based on your health, your condition, and all that sort of thing. Would you be able to advise what are the kind of average prices for someone who's healthy, for someone who's not too healthy, and someone who's really somewhere in the middle? And also, is it also based on the age brackets, or what is the best time to do it as well? But I'd like you to answer the first question before we jump onto the second one.
There isn't like an average, because again, it's dependent on health. So I'm not trying to dodge the question. So you could be 18 and have, I don't know, had serious cancer, and someone could be 65. The 65-year-old's policy might be cheaper than the 18-year-old. So it depends on your health. It depends how much you're looking for as well. So similar to mortgage lenders, everything changes. So if you've got a high BMI, some providers might say, we're going to charge you a little bit more. Some providers can say, if you smoke, we're going to charge you a little bit less. It all depends. But the point is, the younger you are, the healthier it's going to be. Like, you getting insurance at, let's say, 30 is going to be cheaper than you getting it at 40. So when I speak to clients, they say, I'll do it later, I'll do it later. And it's like, the older you are, like, obviously they've done the algorithm and the risk and the actuaries of doing what they're doing. It's going to cost you more in the long run of something that you know you need, because you've contacted me. So the quicker you get it done, it's better you being on risk and it's live, and tweaking it and saying, you know what, it's a little bit too much, let me do a little bit less. And you're already covered, then you waiting, and you get hit by a bus. Or, you've given an example from your friend. Like, we know we need it. It's just the think being human, really. Obviously, we don't want to think about it. But again, corporations, that's all they do every day, is they plan things. So, example, do you think all these directors of these lenders don't have all these insurances for the company?
Of course they do.
Right. So how come it's okay for corporates to do it? We're cool with them doing it. We're paying them. But when it comes to our own family, can't do it. Another reason, when the epiphany moment, when I was reading about insurance, depending on how much you earn, I could have a life insurance policy of up to like £2 million, like, within reason. But the fact that I haven't earned that, and my family can get that tax-free, that's when the penny really dropped for me. So even with certain jobs people have, it might be a multiple of your salary. So depending on your company, let's say you're on 50 grand, they might give you 10 times what you earn. That's 500,000 and you've not earned it. That's the power in it. And then again, because you plan with your family, that 500,000 buy this property, buy that property, invest in this business. You basically have options. And the gap between rich and poor is getting bigger and bigger in 2022 and 2020. It's only going to get bigger and bigger and bigger and bigger. So it's kind of one way you're going to need that. So for example, for you, you could say, let's say look at property in the UK at the minute. Do you really think your grandkids are going to be able to afford the deposit in, let's say, 30, 40 years?
Probably not.
When people on pretty much near six figures or six figures and struggling in London to get a 2-bed flat. That's the point there where this is family planning, and you can say, look, kids, grandkids, use this money for property, because we all know the power of it. But the issue everyone has is having the money to get it. But this, you've got your own family bank as in a certain way. But like I said, if there isn't a plan, communication and trust, not an actual trust, but trusting the family members, because we all know if you're not good with money, do you want to give someone $500,000? No, you don't. But they could be a beneficiary, and you could say, look, give them £1,000 a month to help them pay their bills and stuff. You're still looking after them while you're not here, but you've set a plan and rules in place. That's what that is for.
Wow, that's crazy. That is very, very insightful. And I know you touched on the age just now, but based on your experience and your exposure in the market, knowing how important it is, at what age do you reckon someone should actually not just start thinking about it, to actually do it straight away? Because for me, when I was approached 3 years ago, I was thinking I'm too young to have insurance. Like, why do I need it? But I thank God that broker pushes me to do it, because it's, listen, you have to do it. He literally forced me to do it. Right now, I'm seeing the benefit. And so what sort of age do you reckon someone should start doing it?
Okay. Probably the corporate answer is get it at 18. But let's be real, no 18-year-old is doing that. They're not. Right? I didn't do it. I got insurance because of my mom. So I bought my property at 29 in London. And she said, if anything was to happen to you, would you want your sister to have your property? I'm like, well, obviously, yeah. Then she was like, get life insurance. I was like, okay, fine.
Wow.
And I'm like, okay, it's X amount a month, let's say it's £30 a month, but it's a property in London, it's always going to go up. So when you look at, people get confused with how much the life insurance costs and the value. Don't look at 20, 30, 40, 100, £200 a month, or whatever it is. What are you protecting? How, especially with property people, where I've got clients, you've got mortgages which are in the millions, right? You're not going to earn that in 1 year to protect that.
Yeah.
And if you don't, everything you've worked for, like we said before, is going to get repossessed.
Yeah.
So look at the value of what the money is, not each month. But, I've got clients that'll spend £500 on a car loan, but they won't spend £50 on insurance for their kids. It's people's mindset. I can't force you. My job is to advise you. Like I said before, all those corporates, they're protected. They're good because they believe in these products, and all their staff and their senior staff have these products. Why doesn't the everyday person
do it?
Yeah,
basically.
Yeah. So, sorry, to answer your question, you said the age. So
yes,
I would say anyone that's got property, because it's debt, and children, huge. So let's just say, I don't know, late 20s, early 30s. Because majority of my clients are parents and have properties, because you feel an element of responsibility. Not saying that people in the late 20s and 30s don't have that, because they do, but their mindset is different. So I do have clients who are in their 30s, 40s, or whatever. They don't have kids, they're not married. Fine. They just said, I want to give this to my family. But majority of my clients are parents and they have property.
Fantastic. I like that. So I got mine on time then, because I got mine around that age then. So brilliant for advising that. And for the people who are thinking about, I know you're not a tax advisor, obviously you're not, but what are the tax benefits of actually having this sort of insurance?
Oh, great question. So if you're a limited company director, insurance is a great way for you, where the company pays for it, so it's not you. As long as you can show proof of salary and dividend, you can have this product, and it's an allowable company expense.
Yeah.
So I've got a client where they've said, he basically calculated the monthly payment and the duration of the policy, and he's like, you saved me, 100,000 corporation tax. because it's an allowable business expense. So again, if you're a limited company director and you put your phone through, you put your internet through, you put your car through the business, you can put your insurances too.
Yeah.
If you're a property investor, you're going to put your buildings contents through as an allowable business expense. So what can't you put everything else through?
Yeah.
But
Okay.
yeah, if you're a limited company director, all the insurances that most of them that we've mentioned before, you can put it through the business. Definitely the life insurance. Another example, if you're a limited company director, me and you have a company, right? And if you passed away, your wife gets all your shares on death, right? So she now owns 50% of our business, and she can come in and make decisions. A lot of people wouldn't want someone's partner who has no experience in business making business decisions. And also, if she wanted to sell the shares to a competitor, she can do that.
Right. Okay.
So a lot of businesses, again, the big corporates will have all these in place. It's just, again, getting this knowledge and information to the general public, whereby, because especially on the property circuit, which I've been on for 4 years, people encourage JV, and I get that, but you've got to know who you're getting into bed with, because people sign JVs, someone dies, their spouse gets those shares, and then they can come in and make decisions, change stuff. So if you've got a limited company and you've got other directors, then you guys need to have shareholder protection. So even if let's say there's 3 of us that have a property, one person passes away, their spouse has got a third of the business. Now it's not a majority, but they can sell those shares. And we can't do anything about that. And we all have insurances on each other. So whatever happens, is the business safe? So that's another area that I specialize in business insurance as well. So you could have a key employee. So let's say you've got a company and someone does all the tech and they design the app. If they're not here, they're critically ill and they're off work, the business is going to suffer or they die. So you can have insurance policies on key people that work in the business.
Wow. Okay.
Yeah, so you can get that money back. So let's say the app developer, let's say it's 100,000 to make it easy, and they're off sick. 100,000 come into the business to, 1, keep us afloat, and 2, if we need to recruit someone to replace that person, we can do it. Then if someone's gone, all their knowledge and everything they know about the business is gone, that's irreplaceable.
Yeah.
So that policy is called key person. It could be a top salesperson, it could be any position, it doesn't matter what the job title is. If that person affects the profit of the business, you have insurance on them.
Right. Okay. Thanks very much for sharing with that with us. I'm gonna go back to the life insurance and things like that. Say, I know I've got lots of questions coming through me, because sometimes I get these questions asked before the event itself. So in a situation where you've got a partner, wife, husband, whatever it is, and you've put them on a trust, because I've got someone asked me this question, I couldn't answer it, and I know you should trust your partner, okay? Your partner is your life partner. Hopefully you trust them, and you're thinking, oh, I don't really want her or him to be as a trustee then. And you rather your kids or maybe someone else that you trust, as you just said. How does that normally work?
That's a good question. Again, if you're watching Riches on ITVX, this is actually the plot of the show. Right, trusting your family with millions of pounds. If you don't trust your partner, you've got a lot more issues in life insurance. First of all, it's not good. But it could be, okay, let's use an example. Your partner might not be good with money, okay? So real life example, you could put, I don't know, your brother or your sister as a trustee and your partner as a beneficiary. So again, beneficiaries can't draw down any money. They don't have any power. So you could say, look, I'm not comfortable with my partner having hundreds of £1,000s, but if I give them £1,000 a month, that should be enough for bills and things like that. And they'll get that every month for, I don't know, 50, 60 years or whatever. So you're still helping out financially, not being here. But again, it's about the control. So with that question, I would put that partner as a beneficiary and not a trustee. Because example, that £100,000, they're a trustee, they're a beneficiary, they just spend all of it. And the beneficiaries don't get anything of it.
Right. Okay. I like that. I
Yeah.
like that answer. The other question is, I know you've got this life insurance. Suppose then, you've got critical illness. Say you got ill, for example,
Mm.
right? And you've got beneficiaries and you've got trustees that can make decisions for you, right? Before you go mentally disabled or physically disabled, you've got your partner, could be husband, wife, whoever that is, because they're just fed up of the situation and then they just leave,
Okay.
right? What sort of situation would that be in? Like, what would be the way the insurance would kind of act in that basis?
With that, do you mean like kind of lasting power of attorney? Do you mean if you're mentally like
Yeah, no, no.
not able to make
Let's
decisions?
say your partner, you've been ill for say a couple of months or so. They're just fed up of it. They just want to walk away, basically. And but now they know that if you pass away, they're either a trustee, so they don't really
Oh, okay,
care.
right, right, right.
Right. So
Okay, I
in
get
that
the question.
situation, at that sick bed, would you be able to change whatever you want to change?
The ITV needs to be paying me. Okay, if you watch Riches on ITVX, what you
Yeah.
described is pretty much the plot, right? Of
Really?
someone
I
being
need to watch
yeah.
that series then. I don't
Everyone needs
normally
to
watch
watch.
TV, so I'll need to. I'll
Everyone,
watch it. I'll watch it.
yeah, everyone watched Riches on ITVX. So all these questions are legitimately in throughout the show. So with that example, which is kind of happening in the show, if you're ill and you don't stuff isn't going well with your trustee or your partner and you don't trust them, then I'm like, change it. Like change it.
Oh,
So
you can
again,
change it.
yeah. So that's another perception of insurance. People think once you do it once, that's it forever and you can't change it. It's not
Mm-hmm.
true. You can change it.
Okay.
The plan is not to change it, but I know things happen. So when I speak to all my clients, I'm like, look, we are planning for the long run. But number one, we touch base every year because things happen. So I'll ring all my clients on the anniversary of the policies. Majority of them, everything's fine. One of them said, oh, I've just had a son. That trust thing we talked about initially, I didn't want to do. Can I do it now? I'm like, yeah, helped him out with that. So his son is now on the trust. With that example of the partner, take them off,
Okay. Okay. Good.
basically.
So you could always add trustees and beneficiaries. Say you've got an insurance and you haven't put a trustee in there. Can you go back and add them in?
Yeah, you can do that.
Right. Does it involve additional cost or is just you? It shouldn't. It doesn't involve
I
anything.
mean, depending on the company, I can't speak for because another company they might charge.
Mm-hmm.
My point to the people is ask the question. It should be free, but if they charge, they might charge. I don't know. So
Right.
you
Okay.
have to go back to that broker. So sometimes, I'll do a podcast and I'll get messages from people and they've got a policy and I'll look at it for them. And for whatever reason, it doesn't fit the purpose now, then we can
Mm-hmm.
change it for them.
Okay. Brilliant.
Yeah.
Brilliant. Brilliant. Thank
Yeah.
you
So
so
it's
much
so
for that.
to answer the question again, with the trustees, the beneficiaries, it is there, but if you need to change it, you can. If you've got policies at the minute that don't match, i.e., you've got children, you've got more properties, you're on more money, it's not fit for purpose. Yes, you can change it.
Fantastic. Thank you so much for that. Last main question before we do the quick fire round question. In the property, entrepreneurial world or business world, social media or society, I see first world problem of overwhelm. So many social media channels throwing at you. You got Clubhouse, you have Truth Social, you got Twitter, you got so many stuff going on. People buying their houses left, right, and center, buying expensive cars, living lavish life online. And how do you deal with overwhelm? Because you manage so many things. How can people get rid of overwhelm and stay focused in what they're doing?
Good question. I always hit burnout at the end of the year. So for me, I booked a holiday to Dubai for 2 weeks' time. So to deal with Omar, you need relaxation and a break and be away from social media and your phone. So
Mhm.
breaking that in. So again, with me being self-employed and a lot of people probably listening who are or entrepreneurs as well, you're putting everything and everything into this business and you're trying to make it profitable and you can burn out. So again, income protection, we touched on before. If you said, look, I'm suffering from stress, anxiety, depression, whatever, as long as you have a GP certificate and you give that to insurance provider, you can take time off. And one of my friends who I've got this policy with, he calls it entrepreneur relief. So income
Mhm.
protection, sometimes we think it's like the example, it's the worst thing when you get hit by a bus or in hospital. It might not be that. It can be a bad back. Majority of income protection payouts are for bad back and mental health issues like that. So to answer your question of suffering from maybe stress or anxiety, you can take time off and know that you're still getting an income and everything is fine and the business pays for it.
Brilliant, brilliant. I like that. Just before we go to the quick fire round question, what advice do you have for people who are procrastinating about insurance, who are putting it aside, who are saying I'm waiting until I'm 40s or mid 40s or 50s before I take it? What advice do you have for those people?
Or even the example you gave with your friend, like it's a difficult situation. It doesn't matter how much you earn, everything that you've built can be taken away. Like
Yeah,
just do it now. Like as I would always say to clients, I'd rather you be on risk now. You don't have to get every product. It's just that's the my job is to tell you and to inform you. I'm not telling all my clients to buy every single product unless they really, really want to. Some
yeah,
clients I'll say, look, let's hold off. Let's get a couple first so you're comfortable and then add the others later. Because I don't want you
yeah,
getting all of them, you get overwhelmed, then you cancel them and you're back to square one again. Because
yeah.
in the meantime, it's your health at the time. You know,
Okay.
just because you've got money, if you're not healthy, and the insurance providers aren't going to give you a policy. So to answer your question, if you're suffering from procrastination on it, just do it because you know you need to do it. Because like we said at the beginning of the show, everyone needs it. And if you don't do it, you're just costing yourself more money.
Yeah. Take action, basically. Quick fire round question.
Yeah.
This is purely about you, getting to know you a little bit more, kind of precise on the point. Okay. What's advice you remember receiving?
The worst advice.
Yes.
Oh, uh, I don't know. I think I'll get good advice. maybe I can answer that. Bad advice. I'm blank. You have to come back to me on that one.
Okay. Best advice you remember receiving?
Do what your wife or partner tell you to do.
Okay.
Makes
Who
your
is your
life a lot
favorite?
easier.
Who is your favorite sports star?
I'm gonna say Kobe Bryant.
Who?
Kobe Bryant.
Kobe Bryant. Okay.
Yeah.
Looking back at your 18-year self, what would you have done differently and why?
Do differently. Ooh. I might have stayed in America when I had the opportunity to do that.
Wow. Okay. I
Yeah.
like that. I like that. Why?
Because it's completely different over there. I had the opportunity to stay in America and I decided to come back home. So I could redo it, I would have stayed and just to see how it would have played out.
Right. Okay. Good. What was your inspiration growing up?
I'd say my parents. They both worked really, really hard. They sacrificed for me, and that's why I'm working hard now. Like it's rite of passage.
Okay. Your biggest regret?
Ooh, good question. Biggest regret? Maybe not staying in America when I should have.
Okay.
Yeah.
Is there something you believe that lots of people disagree with you?
Getting life insurance.
I knew you were gonna say that. What is the best book you've ever read or listened to?
Ooh, I've got loads of books. There's a book called The Cosmos, which is about affirmations,
Mhm.
4 hour work week. What else? Rich Dad Poor Dad. I think a lot of people
Okay.
know that
Yeah.
one.
Okay.
Grant Cardone's 10x Rule.
Okay.
Rob Ball's Money. I've got loads on. I listen to Audible quite a lot, so I've
Right.
got loads
Same
of
here.
books on there. But yeah,
Same here. Is there something you used to strongly believed you recently changed your mind on?
I'm a quite ambitious person, so I'm always 100%.
Mhm.
As I'm getting older, I'm learning to relax a little bit more.
Mhm.
But I feel like again, if you're an entrepreneur, you feel if you don't do it, it's just you have to do everything. So you're
Yeah.
kind of in that mode a lot. And then for someone to like relax or give control to someone else is difficult. But I'm gonna have to do that, or else the business isn't gonna grow.
Mhm. Okay. Is there something in the world you fundamentally think is wrong and you'd like to change?
Okay. In London, we've got all these skyscrapers and there's homeless people. I don't get why we can't house homeless people. And if
Okay.
developers are going to build, okay, you've got to allocate a certain percentage, not all of it, to like there shouldn't be homeless people. Like in rich countries like that, I don't get that.
Yeah, you're absolutely right on that one. Everybody deserves a shelter
Yeah,
or a place they call home.
yeah.
So the podcast is called Property Investment Blueprint. What does property investment blueprint means to you?
Building a legacy. It all starts with the first one and then growing and then learning different property strategies. And like you said, the power team and the network, you're going to need a great solicitor, a great mortgage broker. There's so many different people involved in the property buying process or selling process. You need to have experts and specialists in each field, basically.
Brilliant. I like that. Final one. If
Mhm.
there was only one person you'd love me to interview, who would that person be and why?
Have you got Sebastian Newby yet? You had him
No.
on, you haven't? Okay, he's a mortgage broker who I
No.
think is really, really good. I think
Okay.
Sebastian Newby would be good for you.
Right. Okay. Good. Good. Yeah. If you could give me his details after the podcast, I really appreciate. Or if you can if you can recommend him or
Yeah,
refer him to me, I really appreciate that.
yeah, I'll do
Thank
that.
you. What an amazing way to end the podcast. It was great special moment with you. Thank you. Thank you. Thank you. I know you provide absolutely amazing service. Where should we follow you, and where you hanging out in social media?
Okay, so Instagram, Adrian B Finance. All my podcasts have been on or there. Me explaining the different insurance products. When I go networking, so when I met you at Daniel Moses' event in Bromley, which was amazing,
Mhm.
loads of people there. All that information's there where I network, who my clients are,
Mhm.
everything's on there.
Okay. Brilliant. How about Facebook then? Do you have any Facebook
Yeah, so I've got Facebook, LinkedIn. I do a lot of so it's Instagram, LinkedIn, Facebook, all Adrian B Finance. LinkedIn is Adrian Benjamin CMAT.
Fantastic. Okay. And do you have an email address that someone could send you a short email?
Yeah, so I do Adrian.Benjamin at adrianbfinance.co.uk.
Fantastic. This has been absolutely amazing. Thank you for sharing your life passion with us. I love what you're doing. I love the awareness that you're bringing to people about insurance because I believe it's one of the ways to protect your wealth, your family, and generations basically. So thank you so much for sharing that with us, and have a wonderful day. And obviously, I look forward to hanging out with you sometime in the future.
Okay, thank you for having me on the show.
Thank you.
Thank
Thank
you.
you.
Bye.